Hi, this is Howard, and today we're going to be talking about the pros of going with an IPO. There's many pros to going with an IPO as a way to raise funding. It's important for a company to properly weigh the value of going public versus the cost of doing an initial public offering. There are a couple big reasons of why a company should look to do an IPO. First, access to capital. Raising funding through an IPO gives a company access to a wide number of investors, not just a select few who have large amounts of money to invest. This allows a company to potentially raise more money, such as the Agricultural Bank of China. Due to the nature of the stock market and secondary markets, any individual investor can own a portion of a company and also share in their profit and successes. By going IPO, it means that there's a lower level of risk for each individual investor. Second, IPO allows the company to maintain control of their company. The issue with an IPO versus venture capitalists oftentimes comes back to the amount of control that a company wants to maintain. In the situation of Zappos, when venture capitalists were brought into the picture, CEO Tony Hsieh was concerned that he was going to be removed as CEO, and the vision of the company would completely change into something that was not the foundation of what Zappos was founded on. An IPO would allow for many small investors to purchase shares of the company. But in order for them to force a change, it would require thousands of small investors to collaborate and propose a shareholder vote. While being a shareholder gives you partial ownership to a company, the ability to overthrow a board or remove a CEO is something that is extremely challenging to do. IPOs tend to protect a company from this in a way that using the venture capitalist route doesn't. Third, equity as a form of reward for employees. Many of the individuals who made Facebook what it was owned shares of the company. And when Facebook went IPO, these individuals were rewarded for their hard work that they put in. For a lot of people, getting shares can become a huge reward that will potentially pay off in significant ways. This drives motivation as well as a level of buy-in. The same thing happened as well with Qualcomm employees, who benefited from the significant rise in the price of their stock. This actually made many people millionaires that were originally just working as salaried employees. IPO also gives companies the ability to reward employees for the success of a company in a more significant way than profit sharing. The profit sharing money is usually fairly marginal. However, giving stock options gives the employee incentive to work harder because they know that they can potentially earn more money from these shares of stock. At the end of the day, there are multiple ways in which a company can finance their growth goals. IPO is just one of the ways, and in many situations where the funding level needs to be high, an IPO makes sense. Examples such as this are companies such as Facebook, who need a high level of funding in order to grow innovation. A company needs to balance the positives as well as the negatives to doing an IPO in order to determine if this is the best route for them to take.